Pa-pa-pa-pa, ching, 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 ching. Good morning, good afternoon, good evening, everybody. Welcome to the pre-market show, Thursday, the 22nd of January. We have an extra special guest for you today, James Garis. He's going to be giving us some insights and sharing some of the things that he's been looking at. It's been a very, very busy week, especially for a shortened week, considering that markets were closed on Monday. Let's get over to the show. We got a lot in store. Buckle up your seatbelts and let's get over to the show. All right, without further ado, I think it's time to bring on our extra special guest, James Garis. James, welcome to the show. How are you making out today? How are you?
Thank you, Mandela. It's a pleasure to be here, and obviously thank you for hosting me. I'm doing well today. Obviously Thursday, probably normally the busiest day of the week, but I think it will take some beating of yesterday. I think yesterday was obviously a crazy day in the markets, which you get sometimes, and you know, Trump kind of lit a firework in the markets during his speech, and we saw, you know, the futures market or the US indices unwind a lot of that move, just to then have a headline come out later that day that they've reached a framework deal for Greenland, and he's removing the tariffs that he put on at the weekend. And I think Nasdaq rallied about 1% in a matter of 15 minutes. So crazy day yesterday, and I think today will take some beating. But as you said, obviously a very busy week for what was a shortened week due to Monday being a holiday in the US for Martin Luther King Day.
Yeah, absolutely. And I think yesterday reminded me a bit of a roller coaster. And you knew that Trump was going to be speaking earlier, but you didn't know what the reactions were going to be like. And it was a lot of up and down and up and down. Even with gold, I found gold was also very responsive to
I
mean,
to gold obviously started the week very, very strong and was probably the first half of this week the best market to trade. I think you know, from the Sunday night open into Monday, I think it just went up in a straight line, vertical. There was literally no pullbacks at all, and that was obviously just on the kind of further escalations of tariffs and the bit of geopolitical fears. But as soon as Trump used this one sentence yesterday, that when he said he will not use force on Greenland, gold started coming off. And then obviously when they announced the tariff deal later on in the day, I think it was about 7:27 p.m. UK time, gold obviously come off a little bit further. And as I mentioned, the stock markets rallied to new highs and have continued since. But gold was a very nice one, obviously, on them headlines, as people are now not concerned that Trump's going to go and invade Greenland and take Greenland, you know?
Yeah, it's a reminder that the market doesn't like uncertainty. And it's also a reminder of how powerful the president of the United States can be if he says the right things.
Indeed, indeed.
It's incredible.
I say that when Trump speaks, you have to listen. And that's normally standard for a lot of finance ministers or central bankers or politicians. They're worth listening to normally, but if Trump speaks, you have to listen, because he's going to move the markets. Whether it's comments about, as I said yesterday, he's spoken so much. Obviously, it was a bit of a kind of special address. Just while we're speaking, we've just had the weekly jobless claims data come in, 200,000 versus the 212 expected. Just thought I would mention that as we ticked obviously past 130.
Yeah, I see that. Yeah, thank you for catching that. Looks like coming in a little bit better than expected, I guess. But yeah, we did just get that announcement. I kind of see a little bit of reaction in gold, and looks like a little bit of a reaction in S&P and Nasdaq, but nothing major.
Yeah, nothing too major. I don't think obviously this data is really going to be affecting anything for the Fed in the near term, medium term, or long term, really. But obviously the near term being the fact that we've got the Fed meeting next Wednesday, obviously at 7 p.m. in the UK, and I think there's a 99% chance that they're going to hold interest rates where they are. So the weekly jobless data definitely won't be changing that, and market reactions will probably be muted, as most obviously traders are still going to be kind of focusing on the news from yesterday and the kind of fallout after Trump's comments, and obviously the tariff deal, really.
Yeah, I think that was the big major headline that will, I think, carry us over the next few days. I think last weekend we got the initial post about Greenland, basically the tariff 10%, and it's kind of unfolded in a way that I think a lot of people were anticipating. It's hard to always get the timeline right, but I know Trump tends to have a playbook, as they say. And I thought maybe he might switch it up a bit, maybe improvise, throw in a few extra sort of things, and it seemed pretty standard as far as
I mean, there's
a
news provider called the Garis letter who are very good, and you might have obviously seen them on X, and they've posted about their kind of playbook a lot, and they got it down to a T for this week, because they had said on Sunday that normally midweek on a Wednesday, Trump will there'll be, a decent market rally. A lot of that will fade and then pull back. And then very soon after that, Trump will come out with some sort of a tariff deal. And they called it to a T. That's exactly what happened yesterday. But it's a common thing we've actually seen, obviously, throughout last year, really, since last April the 2nd, which was Liberation Day in America. And I was having this debate with a trader earlier on this week, actually, because he was saying that we was kind of debating the tariffs, and he was saying that he could see these ones sticking and then the trade war kind of reigniting. And I was saying that actually I think we'll just continue with the common kind of theme that Wall Street's played on over the last year, which is the taco trade. For Trump, always chickens out. But I think it depends what side of the coin you kind of fall on and sit on. Some people will kind of look at Trump with a bad mindset, maybe, or a negative mindset, in the sense of that he's doing these tariffs and then kind of chickening out, and he's all talk type thing. But then there's also the flip side, the positive side, and it goes back to Trump's book that he wrote originally about doing deals and negotiating, obviously being a very successful businessman. His book being called The Art of the Deal. And in that book, he says that whenever I go in for negotiations, I go in extremely high, where it almost seems ridiculous, because if I've got the power in my hand, they're going to have to come back and meet me in somewhat of the middle, and that middle is going to be an amazing outcome for me. So, if he says I'm putting 30% tariffs on, and then they kind of meet in the middle and he gets 15% tariffs and 100 billion investment in AI, or a country say they're going to buy 50 Boeing planes that are manufactured in America, or whatever it may be, he then sits back and goes, well, lovely, we had a 0% tariff a month ago, and now we've got a 15%, and they've invested 100 billion into American manufacturing. So he's winning. But it depends what side you fall on, in the sense some will look and go, well, he said he was going to do 30 and he only got 15, and it's like, well, yeah, it's a very good deal still. So I think he's a smart man with the deals, and obviously Wall Street have played on that Trump always chickens out thing, because he's now chickened out of these tariffs again this week in terms of the EU. But he's getting what he wanted. He wanted a deal for Greenland. He wanted to acquire Greenland. They said no. He said, well, I'll put a tariff on anyone that is against it and sends troops there. And within 3-4 days, the tariffs are being removed, and he's getting what he wants, So he's obviously a powerful man, but a very good kind of businessman and negotiator as well. And I think it's probably more rare, obviously, within politics and within this financial world, where you see, world leaders that have had that business experience, that are publicly doing deals and getting exactly what they want, where you almost, whether you like him or don't like him, you have to go, well, it is incredible what he's doing. He wants this and he's getting what he wants. When you look at other world leaders, they're not really kind of able to do that, So you do have to respect it. But obviously, as traders, like him, dislike him, whatever it may be, it's obviously about how can we benefit from these global news headlines and macroeconomic trends that obviously have market moving potential. And market moving was exactly what the headlines were yesterday.
Yeah, they absolutely were. They absolutely were. I think I didn't want to look away. That's how much it was moving. And you bring up a couple of good points there, James. One of them is with the importance of understanding the news and the data. And I want to come back to this a little bit later because I kind of wanted to get an opportunity to show who you are to our audience and give a little bit of a background. So before we do that, I'm just going to take one moment to pause and just say a special thank you to everybody who has decided to join us today. We are streaming live on the City Traders Imperium's YouTube channel, as well as Signature FX. And we have the one and only James Garis of a Macro Markets Group with us today. We got a couple comments here. Not sure if you know.
Hello, Rohan.
Rohan, there we go.
Rohan well. He's been a trader with us for a long time now, a long time. So thank you for joining us, Rohan.
There we go. We also have Video Pen, not sure.
I wouldn't recognise the username, but potentially I know. But hello to everyone that is joining us this afternoon. Thank you for obviously joining us on this live stream pre-New York Open.
There we go. There is going to be a giveaway. So we have two giveaways today. One is going to be a $5,000 account. And whoever wins that is also going to win a 1-month subscription to Macro Markets Group. Can you just tell us a little bit about the subscription and what our winner will receive?
Definitely. So Mandela obviously, let me know that he was giving away a $5,000 funded account. I thought, wow, what a great opportunity. And on behalf of Macro Markets Group, we wanted to kind of get involved with the giveaway. So when Mandela does the giveaway later on in the show, whoever wins the $5,000 account will also get a 1-month, subscription pass to the Macro Markets Group membership, which gives you access to our professional ecosystem, our members portal that includes a whole bunch of different resources and tools. We also do webinars a few different times a week, and next week we'll be live for some of the big central bank decisions, and we're live for big news press conferences. We was live yesterday for Trump and stuff like that as well. So you get access to our webinars, but there's a lot of different tools. We've got trading AI tools, custom trading journals. You can get access to Bloomberg TV. There's beginners courses, advanced courses, a lot of information about fundamentals and economics, which is obviously what we kind of specialize in and focus on. There's daily investment bank reports, World Gold Council reports if you're a gold trader, and a few different links to different partnerships. We've got obviously partnered with City Traders, Imperium being the main one. So loads of different resources and tools and software that should help support you as a trader. And whoever wins the giveaway will obviously get a month's access to all of these tools, and we'll get the $5,000 funded account through Mandela and City Traders Imperium. And what I will also do, whoever wins this giveaway, obviously when giving them access to our membership, I will do a personal one-to-one call with them for half an hour to meet them and discuss their trading experience and discuss obviously how we can try and help improve their trading and reflect on some of their results. So I'm really looking forward to seeing who wins the giveaway.
Brilliant. That is phenomenal. And we will be doing that at the end of today's show. So this goes up until the top of the hour, and we'll be doing the live giveaway draw. Thanks very much for that giveaway, James. Looking forward to getting that. So let's give our viewers and our listeners a little bit of who is James? How did you first get into this business? Were you always interested in trading? Where did it all start?
I wasn't. I got into trading now in 2019. So what would obviously be 7 years ago. It sounds crazy even saying it, to be honest. The years obviously fly by, but I think like a lot of different people had seen Wolf of Wall Street and seen some finance films and obviously seen a lot about investing and trading online, tried to get into it. And I think like a big majority of people, I got scammed to start with and lost money. And I always say it was probably the best bit of money I've ever spent in that sense, because it got me in and it got me interested, and I learned a lot. I just lost and obviously got scammed, and it kind of I guess mentioning it also highlights the potential danger of this industry, and obviously highlights the importance of working with people you can trust and and building good relationships. And after that, I was interested but took a little bit of a back step, and it was always still there. And I, towards the back of 2019, then kind of started to dip my toe in again and was going to try and learn the right way. And obviously within 3-4 months of that, we stumbled upon COVID, when the world kind of shut down. And at the time, I was only working in a warehouse, put on furlough, and said, okay, well, it's now or never, and put all of my time into trading. And over the next 18 months, started to learn how to trade, and connected with some experienced traders and started to go about doing things the right way. I'd say I probably learned a little bit different to what most people would do, in the sense of a lot of people nowadays will obviously go online and they'll learn about technical strategies and do a lot of YouTube videos about the charts. But I had kind of stripped back to basics, and I learned about the economy and fundamentals and like how markets actually move. So for me, I trade from a kind of mindset and a theory of, I will analyze what's going on around the world, and I'll trade the right contract for the right opportunity, depending on what my bias is on the dollar or on the Japanese yen or on the stock market or on gold. But over that kind of 18-month period of learning, I also got into crypto a little bit and dabbled in crypto, and ended up doing very, very well in crypto. Made what would have been maybe at the time in the warehouse 2 or 3 years worth of salary type thing. And decided to leave, because I always say you can't really leave your job and become a full-time trader unless you're making more money from trading than your job 3, 4, 5, 6 months in a row. Unless it's either that way or you fall into a kind of big bit of money, and that's kind of what I ended up doing with crypto. So I had the crypto, I went traveling for a little bit, but when I come back, I got connected with some experienced traders that were on a trading floor in Kent. For those that don't know, it's probably about an hour or so south of London, so a little bit away from the main city, and got connected with some experienced traders, got around them, and that's what I speak about in terms of the importance of having good relationships in this industry. Being around traders that have been doing it for 10, 20, 30, 40 years even, it just opens up like priceless experience and lessons being with them on a daily basis. And from there, obviously started to continue to trade. Obviously you go through different cycles and different themes, I guess, if you want to call it, over them years, because I think 2020 and 2021, like COVID and then the kind of run after COVID, for me, I'm mainly focused on US indices. I didn't really trade Forex before that, because before 2022, all of the central banks, the Fed, Bank of England, ECB, Bank of Canada, Bank of Japan, whoever, they all had 0% interest rates. So as an investor, if you had a £100 million fund, there was no reason to have your money in, one currency or another currency, because you were getting 0% interest. Obviously, everyone at that time was investing into the stock market, and crypto kind of had its moments as well. But when you look at the stock market return from the COVID crash to the end of 2021, it was ridiculous. I think it was about 120% or something crazy.
I remember
so
that.
A lot of my trading then was focused on US indices. Again, trading the right contract for the right opportunity, because that's where money was flowing into. But after that, going into 2022, obviously the money printing, the quantitative easing from COVID sparked inflation, and we saw a big inflation trend throughout 2021. And at the end of 2021, when inflation was up here, the central banks decided there to raise interest rates to bring inflation back down. Imagine the scales. And obviously them raising interest rates all of a sudden gives investors a reason to want that currency. And what that kind of caused in 2022 was obviously investors taking profits and selling parts of their stock portfolio that had generated amazing returns in 2021 to essentially hold cash or treasury bonds. And you saw massive flows into the dollar, throughout 2022. So 2022 really was a year where the stock market declined and had played on that trend sometimes, but really was a year where we was bullish on the dollar, and that was, bullish on the dollar against the yen, or bearish on the pound dollar, which obviously had a very bad year in 2022 and had the mini budget kind of flash crash with Liz Truss, and was bearish on the euro dollar as well. And then 2023 and 2024 was a bit of a kind of sideways couple of years for Forex, in the sense that every 3 or 4 months it was like, inflation's going back up, we're keeping interest rates higher. And then inflation's coming back down, we're going to lower interest rates. Inflation's going back up, we're keeping interest rates higher. Inflation's coming down, we're going to lower interest rates. And we had that theme for a good kind of 18 months, in particular focused on, the dollar and the Fed. And it caused the dollar to kind of go like that throughout 2023 and 2024. But all of a sudden, obviously, in 2023 and 2024, one thing kind of came alive that I think we all use now day to day, and that's artificial intelligence. And obviously that sent the stock market roaring over the last few years. But the theme of being back involved with the US markets was kind of very heavy in that time, and also gold as well. Like, I'm a kind of big advocate of the precious metals, gold and silver, and I've spoken out about it a lot over the last couple of years in terms of being so bullish on it, because you've got the dollar weakening on one side and you've got the debasement of the dollar, but you've also got central banks, like the demand for gold is crazy. You've never seen anything like it before.
Oh my gosh.
Over 1,000 tons a year. I think between 2010 and 2021, the average yearly purchases of gold by central banks was about 470 tons. And then 2022, 2023, 2024, 2025 is averaging about 1,000 tons a year. So the central bank demand has increased significantly, and it's not going to be slowing down anytime soon. Even earlier on, I put an article out from Goldman Sachs that they expect 5,000, everyone a few weeks ago.
I saw that.
By the end of 2026 for gold. Now we're at 4,800, and it's looking like it could be there by next week or something, So everyone's their targets again to 5,400, and that's obviously on, geopolitical tensions, inflation still being around, the dollar kind of debasement, but the biggest one is the central bank demand. And even with silver, I've been calling out about silver for a while, and obviously this time last year it was about $30 an ounce, and now it's over $95 an ounce, So for me, it's always been about trading the right contract for the right opportunity. I focus on the fundamentals, the economy, the news. I read a lot of news articles every day, and I've done that every day for 6-7 years. So I kind of view reading the news as just like every day is another page in the book, and I'm turning that page and I'm obviously reading what's going on, and you start to store all of this kind of data and understanding of the markets in your head, and you understand that the markets go through themes. And for me, I take that fundamentals and news and then go, okay, what is my bias now on a certain market? Like, I've only been bullish on gold for the last 3 years. I would have only have looked to bought it in that time. 2022, I was only bullish on the dollar. So I get a bias on different assets, and then obviously go from there. And if, I'm trading Forex, I'll want a bias that's bullish on one currency, and I've got fundamentally bearish bias on another. And as I call it, you've then got your perfect dance partner to trade against. So I hope that makes a bit of sense for someone watching along.
Yeah, that's amazing. That's amazing. I think it's like taking a look inside of how your thinking process goes, and it can be it can be very intimidating, and it can be a lot of noise in the markets. And I think the way that you approach it is in a very sort of disciplined way, and you're only looking to focus on the things that are moving, the things that are going to make you money, and you're happy to filter out those other things that are at the moment not moving, or more or less going to be a distraction. So I like that approach, and we have to have you back on the show, James. Definitely have to have you back on. We've been getting
I know I can speak a little bit too much, a little bit too long sometimes.
It's all good. I'm just keeping We're getting a few questions from some people, so I don't want to forget or neglect those who have tuned in today. So just a reminder, if you do have any questions or comments, make sure to post them in the live chat for James or myself. And then we also do have the prize giveaway in a little bit. We'll probably do it in the next 5 minutes. So make sure to get your entries in. You'll receive a free 1-month subscription to Macro Markets Group if you enter and win the prize giveaway, along with a $5,000 account courtesy of City Traders Imperium. We're going to quickly do a break. We'll do a quick 15-second break, and we'll be right back, James, with a little bit more. All right. We're back in action. Okay, so would you mind if we have a quick look at some of the questions that we got?
Definitely. Let's fire in and see if we can answer them together, maybe.
Let's do it. All right, so this is first one here. Looks like it was copied and pasted. Any new or advice for who trades gold and BTC? Last year's gold was declined this session, 2025. What do you think?
I was going to say, for me personally, I try to avoid the noise with gold. And what I mean in that sense is gold can obviously move a lot on a day. I think that's what attracts a lot of traders to trading gold initially, because it's a little bit more volatile on a day and can maybe make you a little bit more money than your standard maybe FX pair. But for me with gold, and I kind of just touched on it a little bit, the people that are actually buying gold, and I don't mean betting that it's going to go up in terms of trading, but I mean buying it physically, and they're buying tons of it every month, and it's getting sent to their vault, and they're storing it for 5, 10, 15, 25 years. They're not really worried about what happens on a day. And I know they've got a different approach because they're investors and we're trading, but they're the people that are really driving the move. So I think with gold, if you zoom out and you look on the daily time frame, it's more about just recognizing that there's a clear uptrend, there's clear institutional demand, and can you buy them dips that come around every now and then? Because for me, they're really the best times on a daily or the 4-hour time frame. You know, that's where you're really going to be able to run your profits in gold and end up taking moves from 4,500 up to 4,800 and stuff like that, and really profiting. So that's my advice with gold.
I think you're right. I think if you do have a longer term horizon, I think then you'd be very wise to kind of wait for those dips. And I kind of feel like a lot of people at this point, I'll just share, this is a gold chart. A lot of people at this point, they don't want to chase it here. They don't want to get in, and they feel like I'm gonna wait for a dip anyway. But it seems like every single time it's kind of had a bit of a red day. This is a daily. It's very quickly stabilized and going back higher. So I think you're right. I think taking a longer term perspective on especially gold, and being able to kind of withstand those dips, you'll be in a much better place if you look at it at the end of 2025. And like you said, we've only had.
I would have said just that moment there where there's like end of October, start of November, on the kind of left side of the screen. You obviously had a period there where we had 5-6 down days in a row. The main kind of bit of red, the main kind of bearish movement there. That movement there at the end of October, start of November. We also got something very, very similar on the daily time frame at that time in 2024. At the end of October, start of November. And that was mainly due to Trump's election, like being strong for the dollar. But apart from them two instances, if you zoomed out over the last 2 or 3 years on gold, you would probably only find that you ever only really get 1 or 2 like red weeks or even red days before it just continues grinding upwards. And that's what I mean about kind of playing the trend. Like, I've not looked to sell gold once in the last couple of years, because I just know that the odds are within the next few days it's going to be pushing for highs again. So that's for me, like adjusting and not having that kind of, I guess, one set strategy. You're adjusting to a different way of trading a certain market because it's trending and not ranging, as an example.
Yep. Beautiful, beautiful. Next question is just for you, James. I'm going to sit back and take a sip of my water. James, do you use heat maps?
I don't really use heat maps, or as well, the comment below from Richie, he says book maps as well. I don't really use book map or heat map. I know a lot of traders that do. Obviously works for them very well. For me, not something I use, but obviously a very good tool and a very good resource if that's what you kind of focus on and specialize in.
Absolutely. Looks like Rohan saying enjoying the insights. So we got to make this. We got to make this happen again.
Yeah, definitely.
Daily gives you very good entry.
I think he's talking about gold on.
That's
on
the
that
gold,
one.
yeah. Yeah. And then this last one here, as Trump said yesterday, no more tariffs on Europe and Greenland. Deal done. So it means geopolitical situation is easing. So why gold still in bullish trend? I would say that it's still the uncertainty of Trump. You don't know what's the next thing that he's going to mention today. I feel like there's a level of unease as long as Trump is at the helm, and I think that's what's driving it, as well as what you covered as well, James. The central banks, they're just buying it. They don't care the price. They have the cash available, and it's almost like it's a hedge against if we do see some sort of correction in equities, but then it's also working. So it's like the best hedge. It's making you money as you hedge.
Yeah, for me, I mean, even before Trump come in, gold was going up. Before tariffs, gold was going up. Gold, is going up for many different things, geopolitical tensions, whether that's been Russia, Ukraine, Israel, Iran, whether that's America and a trade war, not even a kind of physical war, but a trade war with the world, whether it's been inflation, which is obviously devaluing the dollar, because the value of gold isn't really going up in terms of what gold can buy you, but the price of gold is going up because you need more dollars to buy an ounce of gold because the dollar's becoming so much weaker, which is a bit of a complex topic to understand. But for me, it can go back to simple supply and demand. When you've got big institutions and central banks with so much demand for gold, where they're buying on average 60 tons a month, when you've got that demand there, the price is going to continue to go up because they're continuing to buy more and more of it month after month, year after year. So tariffs, Trump aside, when there's that much demand for something, the price is going to continue to go up, just going back to simple supply and demand economics,
Yeah, no, it's true. It's absolutely true, and I think we're still just seeing the beginnings of this. All right, so we're coming up to time now. I think it's time to do the prize giveaway. So thank you to everybody who has entered the live draw. At the moment, we have a total of, looks like we got 13 responses. So thank you everybody for your responses. We're going to just quickly do the draw. Remember, the prize is for a $5,000 account courtesy of CTI, and also a 1-month complimentary subscription to Macro Markets Group. Okay, here we go. All the best to everybody.
Good luck.
Thank you. All right, and the winner of the double prize today looks like a cash. Congratulations. So we'll get you your information from the form, and congratulations on winning your 1-month free Macro Markets Group subscription and $5,000 account to CTI. Brilliant.
Congratulations to Cash. Obviously, through Mandela and City Traders Imperium, I'm sure they'll sort out your funded account, and I'll get in touch with you. We'll organize a one-to-one call so we can actually meet and speak a bit about your trading experience, and we'll get you on the month membership with Macro Markets Groups. You get access to the tools and resources that we use, and maybe in a month's time, maybe you'll be on this call, and we can maybe speak about your performance on the 5K account, and we can see how you've got on, and hopefully hit a target and been paid out. But congratulations, Akash.
Amazing. And you bring up a very good point, James, which is it's also about what happens once you get the account. And we want to see our community succeed. So it will be great if we can have you on. I'd really enjoy kind of getting an update on how it's going and what worked and what you felt like were some of the lessons learned during that process. And I'm sure your information and your call with James is also going to help along that journey, help you along that way. All right, James, that's it. That's the show for today. Do you have anything special planned for today, or anything that you wanted to mention before we wrap up?
Nothing too special. Just obviously expecting a busy US session ahead. So good luck to everyone that will be trading it. Just going to say obviously thank you to Mandela and obviously City Traders Imperium for having me on this fine Thursday afternoon. It's been a pleasure, and hopefully I'll be back on soon and we can all speak and connect again soon. But thank you very much, Mandela, for hosting me.
Thank you very much, James. And like we said, we will coordinate again having you on the show. It's been an absolute pleasure. And your information and your knowledge has really, really opened my eyes today. So thank you. Thank you very much for sharing.
No worries. Thank you for having me on. Good luck for the US session, everybody.
Thanks, James. Take care. Same to you.
Take care.
All right. That's our special guest, our extra special guest. Now, the reason we wanted to bring on James, not only because he's very knowledgeable and very well informed, but we read every single one of your comments. We look at all of your posts. And one of the things that we found that was repeatedly asked was, can you please bring on other traders? Can you please bring on other intellectual minds, other people who are successful in this business? And we did just that. So we'll speak to James later on today, probably once things calm down after the New York Open, and see about working something out where we can get him on a lot more frequently. Today is Thursday the 22nd. It's the day after Trump's Davos speech, and we are going to get ready for the market open. We're running a little bit over here, but I think it's worth it. When you have very good content and you have a very well-informed guest, it's sometimes necessary to kind of push the limits and get as much as you can out of the experience. So with that, I'm going to leave it there. Just want to say thank you again to everybody who has joined. We appreciate each and every one of you. We're here every Thursday and Friday before the New York Open to prepare you for the New York Open. We've got Akash, we got Raz saying likes the hat. Glad that you like the hat. We're going to see if maybe we can get a macro markets hat next time. I'll speak to James and Joseph about that. Get a little bit of macro market swag going on. That would be nice. And who else do we have? We got a great group of people over in the live chat today. Richie, we've got looks like Abdul, and also a special congratulations once more to Akash for winning today's prize. From all of us here at Signature FX, and on behalf of City Traders Imperium, I want to say thank you very much, and also a special thank you to Macro Markets today, giving us some really great insights and some really quality information. Have a wonderful Thursday, everybody. Make sure that you're trading within your risk parameters. Remember to trust the process. And until next time, happy trading.